Hello, everyone. Welcome to the Monday Morning Podcast. Now, the normal format is me interviewing a guest about important topics in the world of finance or profiling emerging companies. But today, you might notice I'm wearing a Hawaiian shirt, and that's probably because you should never trust a person in a fancy business suit with your investments. Jokes aside, today I want to switch things up a bit. So in this episode, I'm going to do a bit of a dive into a particular ETF that's been on my radar for a while. In this case, I'm talking about Robo, which is an ETF on the ASX that particularly tracks the robotics, automation, and artificial intelligence revolution, or RAAI for short. This is a theme I'm very keen on as editor of Exponential Stock Investor. In fact, over the last 4 years, we've recommended a number of ASX listed companies operating in this space. Now, I can't give you the names of those companies here, and I need to be clear, this is not a recommendation of the Robo ETF. This is merely a starting point for your research as an investor. Think of today as a way to get you thinking about some of the big exponential trends out there in the world, trends that are gathering pace with each passing day. So let's get to it. Robo seeks to mimic the performance of the Robo Global Index. Now, Robo Global is an interesting beast because it's an index, advisory, and research company all in one. Here are some specifics about the Robo ETF, though. In its holdings, you can see it's got companies like ServiceNow and Intuitive Surgical. Its largest holding, Intuitive Surgical, is an absolute beast. It's got a market cap north of US 100 bill, and they do the Da Vinci surgical system. Now, the Da Vinci surgical system was one of the first robotic-assisted, minimally invasive surgical systems cleared by the FDA, and it's been involved all up in about 8.5 million procedures so far. So that's robot surgeons, which is pretty cool, eliminating human error. That's a good thing. As for ServiceNow, it's another monster with a market cap greater than US 100 bill. They do enterprise cloud computing solutions. Here's the one thing about the Robo ETF, though, which is its top 10 holdings all come in at less than 2% portfolio weight. So that means it's spread quite evenly across the RAAI theme. I think it's a good thing because it allows the ETF to capture the trend as opposed to just being heavily weighted towards a few top companies. I've seen that in a lot of ETFs. But there are some more interesting facts about Robo as well, and I'll get to those now. So taking a look at what sectors they have exposure to, it's largely split between industrials and information technology, which makes a lot of sense. It also has around 10% in healthcare and I think around 5% in consumer discretionary. I actually expect the healthcare percentage to increase over time as the health revolution gathers pace. Now, the health revolution is actually a key theme for me in Exponential Stock Investor. In fact, we just took half profits on an AI into healthcare stock the other day at more than 160%. That's pretty good, but I digress. So let's look at some portfolio statistics for Robo. So they've got 84 holdings, a median market cap of 9.6 bill, and a price to earnings ratio of 75.9. So what can we draw from that? Well, that's quite a few holdings, and that market cap is quite high, which gives you a sense for how big the RAAI theme is. That price to earnings ratio of 75.9 you may balk at, but that's actually pretty standard fare for cutting edge tech companies. In fact, a lot of these companies might not even have a price to earnings because they're not profitable. Also, it's interesting to note that Robo's holdings are about half based in the US, which gives you a sense for the sort of geographic location of this particular theme. The US has a lot of high-tech companies out there. So that's part of the reason we dive into the NASDAQ as well with some of our recommendations. But let's take a look at its returns. So the Robo ETF, it shed 11.8% in 2018. It tacked on 29.5% in 2019. And in 2020, it returned 31.5%. Those are pretty strong numbers for an ETF, which is, that by ETF standards, those are really good. But I'll leave that there. As for dividends and just dividends or distributions, it has a 12-month yield of just 0.57%, which reflects the type of companies in its holdings. These are sort of high growth tech companies. They're not generally going to pay a dividend. But they did pay on 15 July 2020 a 51-cent dividend. So it's better than nothing. Now, all of this sounds pretty good if you dig the RAAI theme. Here's where things could get a bit dicey for Robo in the medium term. This is, of course, the bear case for markets at the moment. This could be rising bond yields, some nasty increases in inflation, or even a sell-off driven by some form of unwinding debt. There is an immense amount of debt out there in the market, and that has a sort of over long-term deflationary impact on economies. And also, it's sort of an added risk to the current environment. I believe total global debt to GDP hovers around 300%. So just from that, you basically have to have every single person working in the world for 3 years, contributing every single cent they have to eliminate global debt. But that's sort of neither here nor there. I think the long-term case for the RAAI revolution is strong in my view, which is part of the appeal of the Robo ETF. So definitely check out this ETF or put it on a watch list. It's one of the more exciting ETFs out there. I think ETFs can be quite boring, so that's a nice little plus for this particular ETF. There's a problem with ETFs though, which is that they can in some cases reduce returns, because when you buy an ETF unit, it's like buying shares in a whole range of companies across a thematic. You can get some weaker stocks in there, sometimes holding back returns, which of course is where people like me come in. I'm a stock picker. I love my work. I'd strongly encourage you to look into a subscription to Exponential Stock Investor. It's quite reasonable. That's where I pick stocks using a unique exponential investing methodology, and things are going pretty darn well with this approach. Now, I must stress, though, that these are largely speculative small caps, which carry added risk. But at the same time, that's partly because I tip stocks across a range of tech fields, including things like supercomputing, neuromorphic computing, even quantum computing. I've also tipped a virtual reality company, as well as a range of software companies. So if you're into the idea behind the Robo ETF, definitely check out the Exponential Stock Investor service. It's not just tech, though. There's something for everyone. We've been looking at a lot of commodities stocks recently due to that inflation narrative I mentioned. So that's quite interesting. Do check out that in the description. And as always, like, subscribe, get in touch. We'd love to hear from you, and we'll speak soon.